Welcome back, everybody. It's Tech Tune Up. I'm your host, Paul Meeks. We're here every week on Benzinga's YouTube channel. Here is our agenda. As always, I'm going to hit on key tech news, not only for the sake of spouting it, but for the possible impacts elsewhere in the sector. Talk about my buy list and the stocks that I like to say I have in the bullpen that I'm looking for either price or some catalyst to move forward. And then we'll talk about tech trends. I'll have a little bit of a preamble, but then we'll have a very special guest today, and we are going to be highlighting some impacts of the big, beautiful bill now that's passed and how that's going to look for clean energy and obviously for tech investors. So let's get right after it. Amazon is in the news. In the past, Amazon was very happy to stick with Prime Day. And now they're going to have Prime several days. And why is this important? Walmart and Amazon are the kings of U.S. retail. Amazon is the king of U.S. e-commerce. And we'll see the success of these Prime discount shopping days as a nice look into the strength of the U.S. consumer. I am not convinced that all this complacency that you see. We're back. Sorry about that. So we'll see how strong the American consumer is. Are they biting on these Amazon pricing deals? We'll see. I think it's going to be an interesting tell. Next in the news is Figma. Figma is a private company that is akin to a design shop like the incumbent public company Adobe Systems. Now, Adobe had a offer to buy Figma for $20 billion. It was a outrageous price, but they obviously were desperate to acquire it. But when they got to the altar, that deal was blocked by regulators. So now Figma is going on its own with its own IPO. When the company goes public, I imagine it's a hot IPO, we'll see how negatively impact on Adobe. Next, we have one of the stocks that have been great for all of our Benzinga followers on this program is Robinhood. Robinhood is very interesting. They've always been super aggressive, and now they've taken it to the next level. For potential investors, they have created a token, so not equity at all, a token in the equity of OpenAI. So OpenAI has come back and said, well, this represents no equity in our company. We are not in cahoots with Robinhood, and this will be very interesting to see how it plays out, because this could be a really nasty brouhaha. Next, Micron Technology. I reported here before, this is a company I've covered since the 1980s, that they had a very nice quarter. They're starting to see some nice momentum in their high bandwidth memory, which is used for AI applications. However, the stock had a huge run going into the print last week, and now it's actually backed off quite significantly. This stock is now entered my bullpen. I'm chomping at the bit to buy it. I admittedly missed some of the run, but as it comes in, I am going to go from no bullpen to putting Micron on the mound. I'll probably be buying that stock before too long. Next is Microsoft. Microsoft, I'm a little bit against the grain here. I think Microsoft has moved too far too fast. I mean, right now it's trading at over 30 times earnings, which is well over 2 times what I expect its secular growth rate to be for both non-GAAP earnings per share and revenue. And the company has a challenge because its dispute with OpenAI must be resolved by December 31 of this year, and it could cause a mess in Microsoft's AI ambitions. So that is a huge, potentially negative catalyst, and the stock is really expensive. So I've done very well with this pick here, but I'm backing off. Too expensive right now. I want to talk about Grok, not Gronk, the dude that used to play for the New England Patriots, or Grok, which is the large language model of Elon Musk's XAI. That's with a K. This one is with a Q. This is interesting to me because of all of the private companies that aspire to be the next Nvidia. Grok, which is a AI semiconductor company, looks like their technology is more impressive than most. Even some of the public incumbents like Advanced Micro Devices. So they have announced that they are going forward and building their first massive data center. We'll see how that goes. This could bring some excitement to that name. And you know what happens? Yes, if there's a lot of excitement around this name, it would be going public this year, probably wouldn't even wait till 2026. Taiwan Semiconductor is on my watch list. I've been good on this one for a long, long time. Taiwan Semiconductor is under U.S. tariff threat. So what they've announced is they're going to back off on their planned, very aggressive build out of a fab in Japan. And they are going to circle back under pressure, obviously, from the Trump administration to build here in the States. What I've said here before, even when the Semiconductor Act was signed by the Biden administration a couple of years ago, yes, there will be building some fabs here in the United States, but no, they won't be building many of them for U.S. companies. The greatest builder of these fabs will be Samsung, which is South Korean, and Taiwan Semi, which obviously is Taiwanese. This is interesting. I don't know if this particular person should really be calling and being followed so closely about what he thinks about AI and AI replacing employees, but the CEO of Ford, I think his name is Jim Farley, has said that AI, at least for their organization, will take out 50% of their white collar workforce. So I don't know. Is he a good barometer or not? Still thought it was interesting enough to share. Netflix is a stock I'm a little bit worried about. It's been another great pick for us. The stock has gone through the roof, but the expectations on the street for revenue and earnings and free cash flow growth are very, very high. And they need to continue to be very aggressive to boost revenue to meet those expectations. And so now they're getting into music. Now they're getting into doing some unscripted celebrity interviews. And then they even did a deal with a foreign content provider abroad, which is kind of interesting. They are going to license that content rather than relying on their own productions. It could be a big opportunity, but it also shows you how aggressive Netflix must continue to be to keep with its stock valuation, which is pretty damn high. I have been talking about CoreWeave since it is a private company. Now it's up 4x since its IPO, and its IPO was only very late this past March. They announced yesterday something which frankly troubles me a little bit. They are going to do an all stock transaction. So that should tell you that they think that their stock is pretty expensive. For $9 billion, which I think is quite a bit because they tried to buy this very same company last year at less than half that price. But the acquisition is for a small but publicly traded company called Core Scientific. Its ticker symbol is CORZ. So right now, the original offer from CoreWeave for Core Scientific was about $20.40 a share. Well, immediately, Core Scientific plummeted in price, down 18% yesterday. And so right now, the deal is to be had, if you take a look at the arbitrage spread, for about $14 per share. So there is a great concern about this deal, and the deal is supposed to close by December 31. Maybe the concern is it won't happen in the end. But anyway, when you see a deal like this, and such a large ARB spread, there you should start to think that, well, maybe the deal won't happen, or maybe it won't happen at that particular price. I'm kind of neutral on the deal. I see some fundamental reasons for them to go forward, but I think they paid a egregious price. This is kind of interesting. LG Electronics, which obviously is a consumer electronics company. You see their dishwashers and refrigerators over at Best Buy. They are a South Korean company, and they just reported a disastrous quarter and very poor guidance. And that is a tell for, yes, even the U.S. consumer. Such a fall in potential U.S. consumer electronic sales. Also, I was troubled by the results from the other major tech. Hello, sorry, we're back. Let's get to some of my stock picks. Sorry about the issues today. A brand new one for me here on Benzinga's YouTube channel. So I don't want to delve into it. I want to get to our special secret guest. But I will tell you that my buy list hasn't changed much. And as I've already leaned into in my comments, there are a couple of tech stocks that I think have come too far, too fast. And I'm going from being aggressive buyers of them to sitting back and watching and see what happens. I will fundamentally bless them, but I also am quite worried about their valuations. Who are they? Robinhood is one of them. Netflix is another. I told you that they're starting to show signs of some desperate moves for growth. Microsoft, I think, is overvalued here. And I think this issue that they have with their spoiled relationship with OpenAI, it could be a really risk for them because we get that on December 31st. What's going to happen with that relationship? Also, Guidewire stock we've done very well. Ticker symbol GWRE, a software company for property and casualty insurance companies, I think is a little bit expensive. So anyway, I think what happens here is, and maybe we're starting to see it. We had Liberation Day. Liberation Day gave me a chance to aggressively buy some of these stocks, which I did, talked about it here. But then we had a bounce back off of Liberation Day, and I thought that was too far too fast. I still think that. But now that it looks like the July 9th tariff deals will come and go, we're kicking the can down the road now to August 1st, and some of these tariff deals look like they won't be deals at all, that we are going to go after them aggressively with these original tariff rates that we talked about on Liberation Day on April 2nd. I think over the next couple of weeks, we might have another dumper again with tech and other aggressive growth stocks, because are we going to have a Liberation Day too? After Liberation Day, the S&P 500 went down about 13% in 4 sessions. The NASDAQ, from its February high to its April low, had a full-blown down 20% bear market. I don't see that sort of correction, but I think we're going to have a correction. So stay up on all these broadcasts. Reach out to me whenever you wish. I'm easily found, but we must be ready, and I will be ready to buy on some dips. So next, I want to get into tech trends, and then I'll introduce our special guest. The one thing that I want to talk about is it looks like the Federal Reserve Board will take a pass at their next meeting, which is the end of this very month. And they're not going to lower rates until probably the September 17 session. And remember, at the beginning of January 1st of 2025, before the inauguration of President Trump, the Fed was outlining 5 reductions in their benchmark rate this year. Now we're going to get 2, maybe, and it looks like we're going to kick the can down the road again. We will skip a rate cut this meeting, and then we'll come back to it, maybe, maybe not, based on incoming data, and tariffs will have a lot to do about that on the September 17th meeting. We'll see. I'm really worried about it. And again, I think all this angst could, in the near term, lead to at least a correction, but not as bad as the one that we had after Liberation Day. So what I want to do now is introduce the CEO of Water Tower Research, my research affiliate. His name is Sean Severson. He is one smart dude, had been an analyst for a long time at Raymond James, got some serious institutional cred. I'm going to ask him 2 things. Tell me what the value prop is of Water Tower Research. And then also he wants to talk today, and it's very timely, about the big, beautiful bill and its impact on clean energy going forward, not only in the United States, but worldwide. So, Sean.
Great. Thanks, Paul. Thanks for
Hey,
having
buddy,
me.
how are you?
I'm doing all right.
So, yeah, you saw the lead in. Can you give me a little bit of a lowdown on water tower research? Last week we had John Roy, who's on the tech team with me, but I want to hear it from the boss, and you be the boss.
Yeah, so just a quick background on Water Tower and WTR here. So, our premise is creating a research product that is available for everyone to access, open access research. So it's what's called non-permissioned research. So when we write about companies, we want to be available for everybody, really democratizing the research product. Getting out interesting content as well, focusing on things intra-quarter, using events like this, multimedia, using webinars, using podcasts, finding different ways to get to get research to all classes of investors. Not just the 0.72s of the world who have access to everything, but getting it to the broader investor group, and also focusing on companies that are a lot of times undiscovered. I mean, small cap companies in particular. I like to tell companies that we work with and cover. I mean, you're one of 3,000 boxes of cereal on that. If you look at the Russell 2000 and the 1,000 below that, right? How do you get out? How do you stand out? How do you get to investors so that they can even take a look at you and say, hey, this might be interesting to look at? So how do we start with that? Oops, did we lose you, Paul? There you are.
Yes. Okay. Yeah.
So yeah, so I think it's really the model is based on getting a consistent flow of information to investors. A lot of times about undiscovered companies, and really being able to to find new ideas and then help investors understand those stories. If you think about what we do, it's creating a consistent and regular due diligence package for investors.
Well, one of the things that you and I have talked about before, which I think is interesting, the sell side guys, right? The guys that are working for what we call in the industry the wirehouses, the Morgan Stanley, Goldman Sachs, J.P. Morgan, Merrill Lynch. They are going to focus on two things. One, they don't want to insult the company because they want some investment banking business. For them, publishing research is the loss leader. And two, when they do focus, they love to talk about the quarterly earnings and that regimen,
Yeah.
right? Not a lot of data in between the two endpoints. It's kind of like, 90 days have passed. We were
Mhm.
expecting this number, and they either beat it or they didn't. And the stock goes up or down based on that. So anyway, I'm going to be publishing for you, some stuff on quantum computing, and it goes right into some of those companies that at least now are fairly unknown. So it could be
Yeah.
some opportunities.
Exactly. I mean, hopefully well known someday, right? Focusing on the next generation of companies and the opportunities of growth companies. Certainly one of our sweet spots. And I know you've got some looks at quantum computing and others that are going to be out in the next generation here. So very exciting.
Yeah, and not to say that just like in the AI revolution, there were supporting companies, the biggest being, the GPUs produced by Nvidia. In quantum computing, yes, IBM will be under coverage with their quantum computer, but
Right.
man, there's going to be a lot of supporting companies. And some of
Yeah.
them might be the same old semiconductor companies a la Nvidia. But yeah, it's going to be an ecosystem. It's not going to be just focused on, the latest version of big iron.
Right. And a
So,
lot of
Sean,
private companies too, right? A lot of private companies that are coming out. So I think
oh, yeah.
investors are going to have some really interesting insights into private companies, what the next gen is going to be, and how this fits in with AI as well.
Oh,
Very
yeah. There's
hand in glove.
definitely a hybrid opportunity there. So, Sean, in the time we have left, spend a few minutes talking about what you and I were talking about offline, right? The big, beautiful bill
Yeah.
might be either helping some companies or hurting
Mhm.
some other companies when it
Yeah.
comes to the clean energy theme.
I think there are a couple of things investors should focus on from this. First and foremost is that the business, clean tech and energy transition is going to be around. There's going to be a lot of companies that are going to survive. There will be some that won't, keep in mind. But on the flip side of this, I think, understanding what trends are going to stay in place. And I think that one of the most important ones to think about distributed energy generation. That's going to be key. That plays into some of the names people are familiar with, like NuScale and Oklo on the nuclear side, getting power decentralized, closer to use cases, be it AI, data centers. I mean, you name it. Industrial complexes, universities, whatever. But distributed power is going to remain in place and grow, in my view, because I think the other key part of this is that electricity consumption is going to grow. I mean, you talk about it in your tech talk all the time. You look at all the things happening in AI, quantum computing, you name it. Not to mention electrification of vehicles and other things like that, which is now a debatable point, but it's going to happen over time. So, what happens to the energy infrastructure in the United States and worldwide to facilitate this? The Big Beautiful Bill did some things to, I think, force some reality in the industry. When I say reality, I'm talking about ROIs. I'm talking about generating good businesses. And one of the fundamental questions is carbon reduction a good business? And I think the right companies in the right place are going to be able to turn carbon reduction into a good business. It's going to be viable, but it's going to change the landscape because, for over the years, I've covered clean tech for 15 years, and one of the rubs was always, well, these industries are regulation dependent, subsidy dependent. Can they survive on their own? And I think if you look at the industry today, these companies have matured enough, the technologies are there that they can make some good business models. And we're going to see that being forced. The hand's going to be forced coming out of the BBB here.
Now, are there any companies, I know at Water Tower, you can't go out there. We try to be independent. We don't go out and shill price targets and, buy, hold, or sell.
Yeah.
Who do you think are players that you're at least starting to circle up?
Yeah, so as I mentioned, I think small scale nuclear is very interesting. I think companies in that space and some of the pure plays being, a NuScale or Oklo. Now, this has not been lost on investors. Remember, these stocks have run in anticipation of this. But I think this trend is going to be in place for a very long time. So I think you could, we don't make calls on valuations or things like that, but positioning, they're in a great spot. I also think I'd point investors to another area that is perhaps overlooked, and that is the renewable fuel space. I think solar is going to have some headwinds. Wind is certainly going to have some headwinds, no pun intended. But really, looking at some of these spaces, like where's something that's a little bit undiscovered, and I think the renewable fuel sector is going to be one of those. And the reason is because we talked about America First policies, we talked about energy independence. Remember, large portions of the feedstock that go into our renewable fuels industry in the United States is based on U.S. agriculture. We're talking about corn and carbohydrates. So if you look at low carbon ethanol, you look at SAF, sustainable aviation fuel. There are several companies out there, Rex, Gevo, Neste. There's even some companies have just come out actually in sustainable aviation fuel, if you can believe that. But there are some companies getting out. But I think this is going to be an area investors should take a closer look at. It fits into an America First policy, and quite frankly, low oil prices don't help that. But I think we're probably over the long term, people believe oil prices will go back up, as do we. And I think that makes a great case for some of these sustainable fuels. And remember, I'm talking about drop-in fuels. I'm talking about fuels that can replace exactly what is produced from a barrel of oil and fit into the same infrastructure, oftentimes run in the same engines and same power generation system. So investors should take a look at that. This is going to be a really interesting area.
So, Sean, in conclusion, you were listening along, and you and I work closely together. So you heard my opinion, which is just my own opinion, about. I was not surprised that Liberation Day on the 2nd of April caused a bloodletting. I was surprised about how fast we had this V-shaped recovery. Yeah. And now I'm thinking, because unfortunately on July 9th, there's going to be many more questions to be answered, that the controversy continues at least for another month. What do you think about my view about potential correction, at least a modest one?
I think in the backdrop of the market, though, people have learned that, dips create opportunities, right? So I think there's the sentiment shift that's happened over the short term, but will there be any real pain that's felt that start to show up in the numbers? And you hear this all the time, people debating it left and right. Where is it in the numbers? Where is the inflation? Where is the impact? Is the consumer clawing? An interesting point you touched on with LG today, though, that will there be cracks coming in the consumer?
Yeah.
And I think that's really, what we have to look for, and everybody's been looking for, and why they've been so skeptical of this V-shaped recovery is because they did expect these cracks to start to show, and everybody's where they are, right? And we've learned that buying the dips has been successful, but as you said, got to keep a close eye on it this time. If it starts to show up really in the numbers, then we've got another story to tell.
Yeah, I'm a little bit worried because, of course, they didn't show up in the numbers last quarter
Right.
because April 2 followed March 31. But even this quarter, right, we had most of the quarter, the 10% baseline tariff rate.
Right.
And so we'll have some people, talking about that. But can they really talk about tariffs' impact on their company with confidence when even when they get on this conference call in 2 weeks, they still don't know?
Nope. And the last time a lot of them did pull guidance, right? They took guidance down. They said we don't know what's going to happen. The market seemed to brush it off and continue to go higher with them, afterwards. But they're going to be looking at this saying, I don't see their tone changing or becoming more confident for sure, because the uncertainties are still there. So this becomes a question of probably more of the same in terms of commentary from companies another quarter where it may not be showing cracks, but they're still going to throw their hands up and say, not sure what to tell you on guidance, right?
Yeah, they might be able to give us some directional indicators, but you can't quantify it.
You can't quantify it, and it's interesting because, as we both know, the market hates uncertainty more than anything else. It'd rather know the bad news, like now in sustainability and energy transition. The news, now you can plan around it. You can plan projects. Your economics are a little better set, even if it's not good news. You have something work from predictability standpoint. And that was what was so surprising, is without having a clear line of sight, the market was still able to go up that wall of worry, because uncertainty is worse than bad news, at least in my experience over the last 30 years.
Oh, mine too. I'd rather know a place is burning the ground for sure than
Yeah.
not. At
Yeah.
least I can start to quantify, and that's one of the things I'm worried about. We're not going to
Yeah.
be able to quantify this impact for unfortunately way too long.
So
Hey, Sean,
picking stocks, right, Paul? Finding the right ones that thrive in it. Yeah.
so I'm pretty pumped about water tower research, right? You guys and now me included. Sorry to watch it. And anyway, Sean, sorry about the technical glitches.
Hey, it's AI sucking up all the bandwidth and the power, Paul.
Yeah, that's right. That's right. It plays right into your theme. And my followers, my apologies to you. And we'll get this straightened out, and we will see you a week from today. Thanks a lot for tuning in.
Thanks for having me, Paul. Thank you, everyone.
Best wishes.